Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hello, welcome back. Welcome to Quiet Markets. Thanks for all for tuning in. I'm Coach Tony, and we're going to see Coach Alex in just a bit. But first, we're going to go over some market news here. So let's see. On the U.S. side, great place to start with, right? U.S. equity markets delivered another spectacular week with all three major indices hitting fresh record highs following, obviously, Wednesday's Federal Reserve decision. The S&P was up 1.2% for the week, making it its third consecutive weekly advance and closing at new all-time highs. And NASDAQ, again, star performer, robust 2.2% weekly gain powered by continued big tech optimism. And then the Dow was up 1% for the week, a little bit of a lagger, but what can you say? Let's move on to the Federal Reserve decision. So as I said before, last Wednesday, the Federal Reserve decision was dominating the market headlines. They delivered their first rate cut, 25 basis point reduction, essentially bringing the Fed funds rate to about 4 to 4.25% range. And Fed Chair Jerome Powell, he basically characterized this as a risk management cut. Notably, he was cautiously optimistic about future easing, and also the jobs market was one of the biggest things. The Fed's dot plot also suggests only 2 additional cuts by the year end, which was a little bit more conservative than some of the market expectations for more aggressive easing. Onto the economic data front, let's see some strong economic data. It provided a solid backdrop for the market rally in August. August retail sales surged essentially 0.6%, well above expectations, following an upwardly revised 0.6 July gain. So it was robust consumer spending data. It reinforced the Fed's measured approach and demonstrated the economic resilience on the U.S. side. Moving on to the USD futures and FX pairs, what everybody kind of tunes in for. We have Coach Tiger, Coach Alex watching those FX pairs. So the US dollar, it showed interesting dynamics this past week, initially weakening on the Fed's cut expectations, but then rallying strongly following Jerome Powell's cautious commentary. Euro dollar basically got pushed back to below the 1.175 level as the dollar found its footing, and it's currently trading around that key technical area. Let's see, British pound dollar, it faced similar pressure, retreating from earlier highs as the dollar strength returned. And then USD JPY, it basically showed a lot of resilience with the yen remaining under pressure despite the Fed rate cut. And as the Bank of Japan maintains its ultra accommodative stance. And then lastly, the Swiss franc and other safe haven currencies gave back some recent gains as the risk appetite improved following the successful Fed navigation. Moving on to the cryptos, and then I think we'll touch upon commodities. Cryptocurrencies, they basically showed mixed performance following the Fed's decision. Bitcoin is currently trading around $115,000, I want to say, somewhere around there, holding relatively steady in a tight range it's been for like the last week or two. And the crypto market has basically been anticipating the Fed's cut, so the reaction there is somewhat muted. Ethereum trading near $4,400 per coin is down slightly from recent highs, but maintaining that support above key technical levels. And then the broader crypto market is essentially positioning for potential liquidity flows as traditional yield alternatives become less attractive with lower interest rates. Onto the commodities. Let's see, the precious metals, they had a volatile week around the Fed's decision, as they usually do. Gold's initially surged to fresh record highs, $3,700 an ounce, which is incredible. But then it retreated a little bit following the cautious remarks on the U.S. economy and the jobs market. Currently trading around $3,600, $3,700. It's going to be in a little bit of a tight range, a little consolidation there. Silver also pulled back from its 14-year high, around 42 bucks. It's now trading around $41.50. And the metals markets are reassessing essentially the Fed easing expectations given the central bank's measured approach. And then WTI crude, serious range action. $63 to $64 a barrel for like the last 2 weeks. Still in that complex range, but we'll see if we can't break out to the upside or the down. And then key events for this week. Looking ahead to the coming week, we have several important earnings reports. Could drive individual stocks, sector movements, the entire index if it's big enough. And then notable companies include Micron, Tuesday, Cintas, Costco, later in the week, all which could provide insight into obviously the different segments of the economy. So we'll be watching some of these key economic data releases. I think we have manufacturing PMIs, a couple of Fed speakers who might provide a little bit more color on the central banks following Wednesday's decision. And then, as we like to touch upon, the IPO market. IPO market continues to be strong in the United States. I want to say 25 companies scheduled to go public this week. All-time highs. It's a great time to raise capital if you need it. Obviously, the strong IPO market indicates continued investor appetite for new offerings and a favorable market environment. So with that, without further ado, that was your market news with Tony, and we're going to tune in to myself and Coach Alex, take a deeper dive into these post-Fed market dynamics. Coach Alex, how you doing?
Very good, thank you. How are you?
I am doing just fine over here. I always feel like the market news is a little bit too long, but I'm trying to learn from Coach Tiger and Coach Michael. They do it pretty well. Coach Tiger likes to put in a lot of puns, so I got to start to factor that into the market news. It's always tough. It's always tough to try to make something funny out of this dry nature that we have.
Yeah, he does. He likes to get up a couple of hours early and make a script for it, then send it in. So he puts
Yeah.
in quite a bit of effort for a little 5-minute segment, but hey, we love
Yeah,
him
I
for it.
know. That's awesome. That's awesome. I know. It's the heart and devotion that goes into it. I mean, he loves what he
Yeah.
does. He loves to talk about it. So all the power to him. So how was your week? How was your week last week? I know that we were back on last Sunday, myself, and that was our
Mm.
our first session together, which was great. I mean, I thought it went by pretty quick, honestly. One of the quicker sessions, because obviously these quiet markets can get extremely quiet, for sure, as you
Yes.
know. But no, I mean, we're back on again together. Obviously, coming off the Federal Reserve decision over here in the United States,
Mm,
currency markets, pretty much obviously every market was responding to that 25 basis point cut, and then the Federal Reserve leaving the door open for more, potentially more cuts. But I think one of the main things that I guess came to, it kind of came out of the woodwork a week before the Federal Reserve meeting, maybe 2 weeks before, in those weekly jobs data over here in the United States, how continuing jobless claims just continue to rise and eventually spike, I guess, the week
mm.
before the Federal Reserve decision. So I think that was kind of not catching people off guard, but kind of averting um, the inflationary noise, or the inflationary theme that's always been talked about, and putting it more onto the jobs market. So yeah, like I said, a lot of indices, a lot of CFDs, currency pairs, whatever you get, everyone trades, responding to it. How was the week in a nutshell?
Oh, honestly, I mean, everything, every single pair has responded to it, as you
Hmm.
said, in some way, shape, or form. I know we were joking about it last week quite regularly on the stream,
Hmm.
but I was
Hmm.
just staying away, and it doesn't really matter what it was or what pair it was. It was felt across
Yeah.
just
Yeah.
across the entire spectrum, and I was just sitting there, just going, "Whoa." I'm very glad
Yeah.
I'm not in a single trade right now.
Yes.
So
Yes. Yes.
I
I
guess
know.
our advice to stay away was decent. So a little bit slower, because obviously leading up to that news, that cut, the markets were kind of stagnating. There was nothing happening, and then it kind of felt like a
Hmm.
little bit of a scramble, and waiting for the markets to settle. So yeah, overall, I
Yeah.
mean, last week was very quiet for me. There's just better weeks to be in the market where that sort of news isn't going to completely disrupt the system. So that was my
True.
week. What about yours?
I mean, it was kind of the same. I mean, there were definitely some market movement on Monday morning. Tuesday, as I said, as we got closer to the print, like Tuesday was pretty muted. There was a little bit of afternoon action, which was kind of ridiculous. And then Wednesday, it was like, yeah, it was one of those things. It's just, if you have something better to do, go do it, because you don't even
Yeah.
want to be putting a trade on before hours before the meeting. So like the morning session, obviously the afternoon session was kind of just a wash. I mean, it was, initial read was up because they were cutting, then immediate reversal, then back up, and oh my god, there was so much chop, you couldn't really get a good grip on it. So
Mm.
yeah, I mean, it was one of those things where you want to have a plan going into it. And I think that the best plan was to kind of just sit on your hands, because again, and not that every single time the Fed gets involved in the markets, you should just be doing nothing. I would say a majority of the time you should be doing nothing, because it is going to chop around, and you really don't know what the hell is going to happen unless you're some sort of expert scalper or a high frequency trading type person. Then, all the power to you.
Mm.
But at
Yeah.
least with this last Federal Reserve meeting, it was one of those things where it was going to be a landmark cut, because obviously it's the first cut since we've been in this higher, or this heightened rate environment. So I mean, it was always going to be an an unreasonable variable of risk, essentially. So I think that was kind of
Mm.
the reason to stay on the sidelines. Whether or not everyone did that, it's totally up to you. I know that I didn't actually. I was trying to trade the morning session, and it was one of those things where it's just, my strategy is generally trend following, trying to identify levels, looking for support and resistance, just, plain and simple. And the only problem that I was running into was there were great setups. Things looked really good. Markets coming off, we're blowing through certain levels, not finding any support. I'm like, okay. They're going to put the car into neutral and just let gravity do its thing, right? The market's going to come down. Start to come down, you get short, immediate reversal. Hits your stop loss.
Yeah.
It doesn't matter if you're using like 1-to-1, 2-to-2, 2-to-1, 3-to-1, whatever it is. Just hit your stop loss and then continues down. Okay, looks good again for a short. Get short straight up, like just like stopping you out constantly.
Yeah.
So that's really what I was running into, and I was talking to some of the other futures coaches, and it was one of those things where it's not that I was doing anything wrong. I wasn't over trading, wasn't putting on extreme size. I wasn't swinging for the fence. I wasn't FOMOing into trades. These were solid setups that just weren't working out, constantly getting stopped out. So I was booking loss after loss after loss 3 times in a row. And again, that's kind of the reasoning behind why I said before, just don't do anything, because you can be still doing the right thing. Like I said, not FOMOing in, not taking undue risk, not, sizing up in positions, cutting losers, having stop losses, and you still just get stopped out one after another, after the next, after the next. So it's that type of stuff that you're just looking to avoid, totally avoid. But for anyone that ended up with a green P&L on that day, it's one of those things. All the power to you, right? How were you on the week? Were you green on the week?
Green on the week overall, which I was very pleased about, but it really was just the first couple of days before the news, just getting some solid, trade setups coming in, being really like picky with what I was hopping into, getting those trades, and then just news came out, and I just went, I'm just going to let this settle, because as you said, just the chop, what was going on around it, I could see the exact same thing that you're saying, and I just went, no, I'm good. I'm gonna sit back, and then I just gave it some time, and then it just nothing really eventuated for me in terms of the next couple of days. So looking more to start fresh. Fresh this week. I guess with those losses that you took back to back. Did you end up in the green? Were you break even, slight losses?
I did. I did end up in the green on the week, at least. There is some sort of saving grace to it. But I mean, it's also one of those things. Like I have some direct accounts with Hola Prime, and with the direct accounts, it's one of those things where you don't want to hit the max daily drawdown, because you could blow the account. So I always set that, like I was kind of showing you before, or last week, I was showing everybody last week how you can kind of set like your maximum daily loss limit, right? And once you hit that, it stops you out, liquidates your position, and locks you out of trading for the rest of the day, which I really do think is one of the best add-ons that you can have on a trading system. Because, anyone can just like set a limit where it's like, hey, you hit your max daily loss, like stop trading. But are you really going to stop trading? It's always how much do you actually trust yourself? And I know earlier on in my trading journey, I'd hit that. I just hit like dismiss and like just keep on trading.
Yeah.
And, obviously stuff just isn't working that day for you. So it's just one of those things where, you just kind of have to take it, right? You just have to book the loss, come back tomorrow. And it's tough sometimes.
Yeah. No, I definitely agree. Did you also, I can't remember if it was last week, did you have that event on where it was you and the other futures traders going head to head? Was that last week?
Yes, we did.
How did that go?
We had, so we actually had that. Yeah, it's a good question. We actually had that on Friday. That was the entire session. So we did like a 5-6 hours straight of just trading, no breaks, like no breaks at all. I think some of the guys had to wear adult diapers or something, because some of them didn't even leave. Didn't even leave to take a 2-minute break. It was unbelievable. No, but it went well. Everybody was in the green, thankfully. There was a winner. There was a winner of that. It was announced. It was yours truly, myself.
Yes.
But yeah, I was number one. Yeah. So that was a nice win, right? But again, I mean, everyone was in the green, and that's really what it was all about. I mean, and it was kind of
Mm.
tough because I was up. I think for the day I was up $6,000, something like that. Um, and that's in one of the funded accounts that I have. So I don't know if
Mm.
it's going to be a good thing or a bad thing. But I mean, as you know, with Hola Prime, with the funded accounts or the direct accounts, there is a consistency rule, right? So that
Mm.
$6,000 day, I actually haven't even looked to see like what I need to make now. I'm sure I need to make like
Yeah.
$15,000 before you can actually get
Yeah.
a payout, which is just like that might be a little tough. You'll definitely have to size
Yes.
up to be able to make that. So we'll see if it can be done. I don't know. But yeah, it was great. It was great. Are you guys like planning anything like that? I mean, because that would be something like the morning session for you guys to just kind of just go head to head and see who can come out on top.
I'd love it. I'd love it. They'd have to handicap me, I think, though, because Tiger and obviously either Richard or Michael, they're doing the
Hmm,
higher
hmm.
time frame. So I'll just get in and just
Sure,
go trade, 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 and like that might work against me, absolutely. But they might
yeah,
hop into a trade, which is absolutely fine.
for sure,
Sometimes I've seen
for
Tiger
sure.
hop into two, but I'll hop
Hmm.
into double that. So on the good days, when you're
Absolutely,
seeing the P&L, it reflects quite differently. So I reckon
yeah.
if I did more day trading, then we'd be able to do it. But I'd have to swap my strategies back over. So yes, potentially, but not in the usual way that you see me trade. Yeah.
100%, 100%. No, I mean that is good. That is pretty awesome. So, I mean, they got to definitely get a couple more of those days on the books. I actually don't know if this is what we're going to be doing for essentially the duration of the next couple of Fridays. I think that's what we
Mm.
are going to be doing. But if you guys, I mean, if you, do, you, are you on the Friday morning session?
No, no, not the Fridays. I'm today and tomorrow, but I would
Okay.
definitely hop on for a bit of a battle, for a bit of a
Hmm.
duel. That would be fun.
I was going to say, yeah, because that would be something. I mean, there's a little bit of bragging rights. You get to obviously practice a lot more trades, take some outsized risk that you might not normally take. Because I mean, this is a thing. I mean, we have $150,000 futures accounts. There's no leverage, right? There's just margin
Mm,
requirements. So essentially,
mm,
of all the tradable instruments under the sun, you can take about, yeah, it's like generally 13 to 15 contracts or 13 to 15 lots.
yeah.
Essentially, your notional size is $150,000, right? So
Mm,
who would have thought?
yeah.
So, usually I only take like 2, 3 lots maximum, and with the
Mm,
way the NASDAQ, which is obviously the main thing that I trade, with the way that goes, 2 to 3 lots. I mean, you can be up $1,500, $2,000 in 5 minutes, and like boom, done. That's the trade that you're looking
mm,
for. Then you're done for the day. So
yeah.
that's kind of like the best part about trading with increased lot size, and then obviously the instrument up being the NASDAQ. So yeah, I mean it
Mm,
is pretty crazy. But I mean for the challenge we were taking, I mean I want to say, I mean I might have had 15 contracts on, so like the full size, just because I
yeah.
mean it makes for good content. People want to see some
Yeah.
risk out over here. They want to see you
That's,
betting half the mortgage, half the house on this
yeah.
one trade. So that's kind of what we were doing. So it was good. It was good content. It was awesome trading. But
Mm,
actually Friday, I'm not sure if you trade Fridays. I mean, I assume that you're trading just about every day, right? If you're
yeah,
not
I
on the
am.
Hola Prime stream. So
Mm,
there were two actually crazy volatility spikes because he's doing some sort of EU, um, I don't know, roundabout or some sort of like a um, event, like just going to visit a couple of EU countries, and he started speaking about the market, about what he plans on doing with the Fed. So there were some like crazy volatility spikes, and
mm,
I know that there was this one where I was net short on the Nasdaq, and he said something bullish about the market, like how, like, China, yeah, we have a great relationship with China, right? And like the tariffs are coming together, like they understand our position, we understand theirs. So it was, really dovish, and obviously
Yeah.
bullish on the market. And it just went right, just straight up. And I think I had like 7 or 8 lots on, and I was immediately down like $3,000. But it just immediately got squashed, which was good. And I didn't have a stop loss, which I never do. I always have
Yeah.
stop losses on. So, but again, good for the content, because it just shows, like, it's just like, holy, what the hell just happened here? Like,
Yeah.
unbelievable. Anything can happen. Honestly, anything can happen on those types of moves.
Mm, mm. I know in the comments last time, and Tiger as well, saying one of the traders had trades like I said with different assets. It was like a bovine or grain or something like that. People were
Yes,
saying
lean
that
hogs and wheat
yeah, that's
future.
it.
Yeah.
Yeah,
Yep. Yep. I
that's
mean,
so funny.
it's we try to trade, a basket of goods. I mean, I don't try to do it, but there was this one guy, Coach Paul. He has a
That
commodities background, and yeah, he was trading all of it: lean hogs, sugar. I mean, he doesn't trade sugar on our platform, but still, the
yeah,
soft
yeah, yeah,
commodities, as they call
yeah.
them. Yes, 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 yes. So totally awesome. Totally awesome.
Mm. Gosh, that's
Yeah.
so funny. I haven't heard of a trader. Well, I haven't known a trader to trade them in so long. It must have been several
Uh-huh.
years. And then someone was talking about it in the comments, and I was like, "Who? Who's doing this?" Like, I've got to chat to him. I'm gonna pick his brain and see what's going on.
Yeah. Yeah, absolutely. Absolutely. I mean, and that's the great thing about jumping on with so many different people. It's everyone has a different background, right? And everyone is just, trading their individual names, whether it's commodities or indices or whatever it might be. You do get just a very wide breadth of scope, and obviously different experiences, different strategies. So, I mean, that's one of the reasons why I do, like, truly enjoy, Hola Prime and everything that it has to offer. So
Yeah,
yeah. And then, of course, we have like this melting pot, right? Where you get people from the United States, you get people from Australia. It's
yeah,
it's crazy. It's awesome. It's awesome. You get
yeah,
to see just
absolutely.
about everything here.
Yeah, yeah, yeah. I think the word you used before was just basket. It does feel like just this basket of just everything. Everything that you could
Mhm.
want in trading is here. They're just whatever it is that you're trading, it's around. Whether it's Bitcoin, whether it's futures, whether it's Forex, whatever it is. I mean, it's around. Scalping, day trading, swing trading, intraday trading. Oh my word, there's so much to go
Yes,
on. I
sir.
When I'm watching some of the live sessions with the other traders, I have to remember to myself going, I can't take that. Like I think I call it like the shiny the shiny symptom, where it's just like it's a new shiny thing. I want it. I like
Yes.
that strategy looks cool. I want to trade it
Yeah. Yeah.
right now. I always have to go, no, I can't do that. Like I've got this strategy. Fine to back test it and maybe have like a
Hmm.
DGen account somewhere over there where I start playing around with
Yeah.
it. But
Yeah.
I'm always gonna be like, that
Yep.
can't go my main accounts, even though they're awesome. Uh, some of the strategies that come out.
Yes. Absolutely. Absolutely. It is. Yeah. It's one of those things where, I mean, I've seen so many different people trade so many different um, instruments. I want to say the best ones that I have seen, or the ones that I find most compelling to potentially try, are the guys that are trading the cryptos. I
Mm,
forget their names. I know James and I believe another coach. I think his name's Paul. They're trading the cryptos like early morning on the U.S. session, and of course they're looking at the currencies, they're looking at the pre-market open, all that type of stuff. So yeah, so it's one of those things that I would like to trade something like Bitcoin, because I mean it
mm,
does have some pretty interesting moves. It is obviously extremely volatile, but it does have some pretty interesting moves. Um, and again, it's such a large notional value. I mean, at least for my broker, it's like you guys got to have like $150,000 in margin available to be able
Yeah.
to like take one lot. Like it's so
Yeah.
unbelievable. Have you ever looked at the cryptocurrency futures or anything like that?
I have, but again, the volatility has always been something that's enticed me, and in equal measures
Hmm.
put me off. Because I'm just used to,
Yeah.
I don't know, maybe I've just gotten into my groove over here. I'm scared of this new thing that's just over there, just like moving really quickly. But my brain
Hmm.
does go. I've filled with it. I mean, Coach Tiger's been taking trades. He's just randomly started now taking a few Bitcoin trades. He's absolutely loving it over here on the FX side of things. Obviously, it's crypto.
Unbelievable.
Um,
Yeah, yeah.
it just makes me laugh. It just genuinely makes me laugh. It's just like these really quick moves that just happen. But yeah, I've looked at it, but yeah, I don't know. I always talked about crypto being like driving a manual car. In terms of that extra volatility, just adds something more to it. Just one more thing to like talk about. And I've had friends and other traders that have been in the markets, and just like you were talking about then with Trump talking about, oh, the market's being bullish and it's really good, and that like that those pump and dumps can kind of occur. You can get just some random guy that's kind of in the space of cryptocurrency, like it may be kind of well known, and he could go, "Yeah, Dogecoin's amazing," and it will just soar, like it will just go, and you sit there and you just go, how did that happen? He just said one thing. Is it backed by anything? But last week when you specifically talked about this, and I agree with it. Like in the crypto markets, if you have just belief, it will crazily move. And that for me, especially when like back testing, I always thought, am I going to have to put in some sort of like, if say I have a 60% win rate, am I going to have to put in some sort of like variance for when those times do occur? Because maybe they're a bit rarer, but they do happen. And I've seen traders on the other side of it. And I go into my little world here and I go, the news is there. Apart from that, for the most part, nothing
Hmm.
really happens. Whereas Bitcoin, it
Hmm.
does feel like there's just that added element of, well, maybe follow what Elon Musk is saying on Twitter, because if he's about to start talking about crypto, you see him talking about crypto, get out of your position or double down on it. You know which one are you supposed to be going
Hmm.
for? So bit of a
Hmm.
long-winded answer, but yeah, that's how I've always like struggled with it. Because if I've got a 60% win rate, do I? Because I don't know what
Hmm.
these guys are going to say, and they can just mess up my day in a second. So hopefully
Yeah.
that makes.
Yeah, yeah. No, I know. It is one of those things where it's headline risk, right? But it's
Mm,
headline risk at like the most unreasonable people, in the world, like these people that just like say something on the fly. And like, yeah, you have these like alleged whales of crypto that it's just like,
mm.
I don't even know who this guy is. I never heard of him. Like he
Yeah,
has like no verifiable track record like in crypto or
yeah,
anything about, I don't even know, blockchains or the technology, but like everyone just listens to him. And it's like
yes.
that is where you should, and that's kind of the reason, one of the reasons why it's always been standoffish to me getting involved in the cryptos,
Mm,
because of stuff like that, where it's like you just have these weird swings in the market where it's like, hey, like everyone is extremely bullish on crypto, but I mean, at one point it was like 50% off like the all-time
yeah.
highs. And it's like, that's more than like a speculative asset. That's way more than
Mm,
a speculative asset. That's a meme coin, a meme stock. Like, what are you talking about? Like, I mean,
yeah.
I actually heard it. I heard it before where they were saying, yeah, Bitcoin's the new digital gold. And I'm just like,
Mm,
what? Like absolutely not. Like, I mean, I
yeah.
get it, right? Like it's a digital coin, but like I would
Mm,
never compare it to gold, obviously. It doesn't have the
mm,
verified
yeah.
track record, the stability, obviously It's not pegged really to anything. And it's one of those things where it's like, yeah, like gold is good for many things, right? It's physical, right? It's traded on the exchanges for sure. But like, what do you do with crypto if the freaking power goes out? It's just like, yeah, you can have $1 billion of crypto, but like, what if it's like nuclear Armageddon and then they take down the grid and it's like, okay, now what?
Yeah.
And it's like, yeah, exactly.
Mm.
So there's really no, I
Absolutely.
feel, real world utility for it. And I love how like, I love how in the beginning of the crypto phase that everyone is going to, and for everyone in the chat, I'm not here to take a crap all over the cryptos, but I am just pointing out some of the pitfalls of crypto. Is that, in the beginning of crypto, they're like, yeah, we're going to have everybody paying for paying for the pizzas, paying for gasoline. You're going to have your card is going to be directly linked to your crypto wallet. It's going to convert into cash. And then like you pay for goods and services with it. And it's like, that like doesn't exist now. Why? Because like
Yeah.
it's essentially having a debit card on your 401k or your portfolio, right? Where you swipe and your broker sells stock against it to raise cash and then you pay for shit. It's like that is such a losing game that it's just one of those things that it's not going to work out. I don't know. But I know that there is a little Bitcoin question in the chat for everybody that's out there. Take a look. We're asking Bitcoin, where is it going? It's at 116,000 right now. What's the next big move? I voted over $120,000 soon. But, it looks like some people are saying that there's going to be a correction. So I don't know. We'll see. I mean, I think that some like stuff like Bitcoin, I think that it tends to follow gold for whatever reason. And thank you, Samuel Trades, for putting all of your trades in the chat here. We can definitely look at. I think it's. Are you looking at the US 30? No, I don't know. Some of these guys are putting trades in the chat. If you're here, if you're present in the chat, if you're watching, any questions that you guys might have for us, it makes for awesome content. You can ask either Coach Alex or myself any questions. Coach Alex mainly focuses on the Forex, the crypto pairs. I mean, not the crypto pairs, sorry, the Forex pairs. He likes talking about the cryptos. And then I'm basically, I focus on the futures and some of the commodities contracts, most specifically precious metals. And I think we'll get into some of the charts in just a second, kind of see where things are moving, see what happened last week, obviously, with that pivotal Fed announcement, 25 basis point rate cut over here in the United States. Again, really interesting about what's going on over here in the United States, where it seems like the Bank of Japan, the Bank of England, like they're almost like finished with cutting rates, or, they've been cutting rates for some time. Every country, every geographical area has its own positives and negatives, its own economy. But like the Federal Reserve is just starting to cut rates over here in the United States. So it is kind of odd for us to be so far behind the curve. And obviously, and if you ask the president, then he would have said that, the Federal Reserve should have cut rates a year ago, right? So he thinks that we're a little bit too late to the game here. So again, guys, good morning, good afternoon, good evening, wherever you are here in the world. At least my time, it's 9:30 p.m. Eastern time on Sunday evening. So talking to everybody in the future, it seems. Samuel Trades, he says, I would rather trade XRP or something else. Yes, Samuel Trades. Yeah, anything but Bitcoin, right? Trading some of the altcoins, trading some of the crap coins. There's a little bit more volatility in those. And I guess a lot of people like to just buy and hold and shoot for the moon. But you got to be careful. You always got to be careful out there. Dita Wasa, thank you so much for tuning in. I think Dita Wasa actually won a 25K account last week on the futures session. So congrats. Hopefully that account is still in good standing. That's for sure.
Mm-hmm.
Oh, and nice. And yeah, guys, sound off. Where are you texting in from? Samuel Trey says, good morning from Nigeria. Wow. Awesome. 2:34 in the morning here. That's awesome. Thanks for watching. We appreciate it. Honestly, guys. Any questions or anything that you guys want us to take a look at, feel free to put it into the chat. We'll be monitoring it constantly throughout our next hour and a half of this segment. This is Quiet Markets. Coach Alex, any topics you want to discuss, or any charts that you want to talk about, or any trades that you want to go through, either forward looking or backward looking? What was your, I don't know, what was like your best trade last week? Like, I don't know if you want to talk about it or if you just want to show it on the chart.
Yeah. We
What was your
definitely
best trade
can.
last week?
Let me get it up now.
Yeah, for sure.
I have to open up a brand new screen. Back end, you can share it whenever you want. Now we can go into it. I believe it was Euro USD. Had a very good trade. Once that comes up, I believe I'm sharing back end.
Yep.
Yes, here we go. So we're on. Now let me find the Monday. We're on the 1 minute. I know I can just press the replay button and go back. But not up. Tuesday as well. Yeah, cool. So this was one of my favorite trades of the week. So much like, I guess, similar to yourself here in some sort of way, Tony, I've got my opening range here for London instead of the New York. However, mine is for the 30 minutes, first 30 minutes through here. So we have our range in here and we're just waiting for that breakout. For anyone that hasn't seen my strategy, right? And I'll just basically go over it in layman's terms here. And if we've got any questions, I'll check at the end to see if you have anything. But for those who haven't seen this before, we basically just have this big solid red line. That is a VWAP. You can literally see this tool over here, anchored VWAP. I can't remember exactly where it is on the charts and how to find it, but it is somewhere around here in one of these sections. Here we go. There you see it with projection, long, short, anchored. That's what we have here. So that's the tool that I use, and I just start it over here at the beginning of the London session. That will run through. You can see other lines. We also have another one that is the weekly one that starts in Asia. We have the Asia for that day, which is this thinner blue line. So all these lines that are going around, I will refer to when we come up and actually use them. Apart from that, these solid light blue lines are essentially Bollinger Bands. That's what we're looking at through here. They're just your highs and lows in the market. They can be broken, as you can see through here. They can disappear. That simply is just when they're broken through. When price is so volatile or impulsive or whatever it is that it decides to break through this area, the line will cease to be solid. Now, essentially, what we need to hop in is for that said line, the light blue line, to be broken through. And I'll do it that way. Just like we talked about here, and you can see it breaks through around this area where the line ceases to become solid. What we also want is an initial breakout and retest of the range. Right? That's what we want. A breakout and a retest off the range. And this is not in a particular order. This is just what we have here. I could do it in order, but I've not started that way. We break out essentially of the range through here or here, and then we come back in. I don't need it to retest the tops. The retest can simply mean it's going to come back in here and retest off a VWAP. And that's what we're going to be doing. So the breakout and the retest specifically, if I then go into here, retest is off VWAP. Doesn't matter which one, whether it's the London session, whether it was using something down here. Now, obviously, that's a bit of a stretch because it's so far away from what we're looking at in price action. Hey, we need that retest. So eventually it does break out, comes back down here. We get a retest in this area right here. Specifically, this was the one that I was looking at, not for any reason. You could be looking at this one, but this was just very clean. And from there, there's really only one more thing that you want. You just want, if I go here, an impulsive move. Now, this can be an engulfing candle. This can just be a candle with a lot of volume, which will represent itself in a larger candlestick. That's what I can see here in this candlestick. It's basically taking out all of this area just to the left of it. Now, remember, we are on the 1 minute chart, so it has taken out a little bit here. Soon as this retest essentially finished, we had that impulsive move. Now, the line's not broken yet, so I had to wait for my entry, see if it was just going to be a fake out. Eventually, through here, it did decide to push through, and we were just basically coming out of the range at that exact same point. Put my stop loss underneath my last low, and we just went for it, and we just kept on going and going and going and going and going. I think we did eventually hop out somewhere around this area at 2.75. Not that great in terms of risk to reward. For me in my strategy, yes, because usually we're going for 0.8s, 0.7s. So it was larger for this, but for day traders, etc. I mean, I see some people like Tiger going for 1 to 4s, 1 to 5s. So a little bit different here for me, but we do hop in for a load of different trades. I'll hop in for 3, 4, 5 in a session occasionally. We just continue to go all the way up. We do have our initial target, which was here. You can see kind of in the background, there's these thin green lines. That is just this orb and targets indicator here from Lux Algo. It will literally just print them out, and they will be, funnily enough, half the size of the range. So in here, that's like 6.4 pips. If we drew halfway down the range here, it's going to be roughly the same. 6.4. There you go. So that's all that these green lines are. They're just 50% of the range, and that would be 50, then that would be 50. Now, we got greedy. Could have easily hopped out the top here. Didn't. Waited for this to come back around when the line became solid again, and then we just hopped out the market. We were done. We were finished. It was over and done with. But this was my favorite trade. Did everything that I wanted to. However, I would say this. If we formed another double top like so, that would have excluded it or excluded me trading this pair for the rest of the session. You could say that it did start to range, but it was still quite early on in the session. I was giving it a little bit more time because we'd only been going for an hour and 40 minutes. Now, if we're 2 hours into that and we're ranging through here, I'm not wanting to hop in. And I'll give you an example of what that looks like, because my problem pair, so to speak, is oil. It has been annoying me nonstop, not doing what I want it to do at all, and just generally being an annoyance to me. This
You're not alone.
Is a perfect example. You know, oil. It's just getting me. But this in here is what I was not hopping into it. We were leaving it alone all through here. You can see the first 2 hours. That's 2 hours right there from when we started. Just hanging out in the range, maybe breaking its head, poking its head up and going, oh, I might do something. And then just doing absolutely nothing instead. So this is an example of a trade that I would say no to, because it's really not moving. It is ranging. This over here was borderline. We did get close to it, as I said, within that 2 hour period. If it wants to start messing around, I'm not here for it. I think Tony and I have talked about this before, just the power of sitting on your hands and just going, I'd rather wait until the market looks good in order for me to hop into a trade. There's no point in me going, well, I haven't traded, so I'm just going to hop into the market, because that's not going to make me money long term. It's just I've done that. I've been there. I've done that, and guess what? It's never made me money long term. It's never made me money. I always sit there at the end of the month and go, damn, my bank account looks so unhealthy, or my trading account, I should say, looks so unhealthy because of that.
Sure.
So, yeah, that was my favorite trade in terms of what happened last weekend. It was on live, so if you guys are around for that, hey, you could have traded it with me and taken it to the top. But that is me, Tony. That is me done in terms
Yes.
of my favorite trade.
Yeah. That's a pretty good one. So you like that. So it's anchored VWAP, right? Is that what it is, or it's
Yeah.
high anchored VWAP? Is that yeah? So you're looking for that initial essentially breakthrough there,
Mm-hmm.
confirmation close above that, I assume, and looking for a
Yes.
continuation trade. Obviously staying above.
Exactly.
Do you ever use MAs, like any of the MAs, moving averages?
I have in the past, but
Yeah.
sometimes it just flooded my screen, and when I took it off, it actually made no difference. Taking it out to my data, I went and back tested it, and I went, oh, this hasn't done anything for me. So I just
Yeah,
took
yeah,
it
yeah, yeah,
and
yeah.
just drew a few things back. It's simple, but it's here. Usually, I do look for a confirmation bias in terms of like the trend beforehand. That will definitely come into play. Like if it's already been ranging for most of the day. I'm really not looking to hop into it regardless. I know, especially on the 1 minute, the 5 minute can pop up and you can get things in there. But when the market has been moving for a little while longer, I'm probably more inclined to hop in to it through there. And you can see, especially with some of the other anchored VWAPs, if we're using them and we're respecting them throughout the session, again, something else that I'm going to be looking for, just it's not going to stop me from taking a trade, but it's definitely going to make me think, okay, yeah, we have a clear direction. Oh, yeah, we're using whatever it is, these highs and lows, these basically Bollinger Bands or VWAPs through here, and we're respecting them. I'm going to guess that we're going to do something similar through here. And if we follow my rules and get in and it pops up, I'm going to hop in rather than, again, look at something like oil where it's just an abomination. Like the day before,
Yeah.
yeah, cool, we've got movement. And then all of this, just nothing throughout essentially Asia. Yes, an absolute crazy spike up and a spike down coming into London. Yeah, nuts. But apart from that, I was like, oh, I have no idea what you're doing. And then, of course, it just falls straight back into line until, basically the New York session where
Yeah.
it then decided, yeah, I'll continue to move on. But again, long-winded answer, but that's kind of all I really look for when I'm hopping into the markets through here.
Yeah. Nice. That's awesome. No, I mean it's one of those things where, any type of good strategy needs to have some sort of rules-based approach, right? I mean, you can't just because I mean, you could probably just go back and like start back testing like, okay, I can't get into a long trade yet because I haven't gotten that candle to actually pierce through that anchored
Mm,
VWAP and then close above, right? And there, I mean, even
hmm
so, before you actually had that big swoon to the upside, it did
hmm
look like it was just like touching it, maybe once, maybe twice, and then like
Yeah.
it actually decided to go through. So again, I'm sure if you went back in time, that you'd see sometimes it just touches it and it like acts as resistance and it just totally rejects off of that level. So I mean, it's a really really good strategy. It seems as though it's pretty well thought out. Yeah, what's your win rate with a strategy like that?
So I'll put this into perspective for everyone. I move when we hit to a 1-to-1. So my original targets will always be something like this. So I will be going for this next line. So initially you would have been able to see that I'm going for a 1-to-1. Now when
Oh
we
yeah.
get halfway in our take profits, I do move it to break even. I am not counting in my data, and I say this to everyone, not counting our break even trades because I'll always put my stop loss basically just above to at least try and cover some of the brokerage fees through there, a pip or two above, whatever it needs to be. I won't be counting them. So, with that being said, I am roughly sitting from the last time I checked on a 76% win rate. But usually I'll have much smaller stop losses somewhere around here. So I only need maybe an impulsive candlestick, or as you can see through here, two, and I'm done. And then it can kind of turn around through there. So even if it did
Sure.
or had a formed a triple top, I was kind of in the mindset anyway that, well, you can come up here and do that because my stop loss is going to be basically situated here anyway. So if you do want to come down, it's fine. So yeah, we're sitting about that 76% right now for this year.
Wow, that's awesome. Yeah, that's really good. I mean, it's anything above, I mean, well, really anything's okay. I mean, anything above 50%, right, is pretty dang good. I mean, I'd also say that,
Mm.
even some guys, they can win with 40% win rates as long as they do end up cutting some of those losing trades before they turn into massive losses. So, yeah, I mean, that's totally awesome, dude. I mean, that's exactly what you're looking for when you're trying to get into a trade or whatever it might be. So awesome. I mean, I think for me, see, this is the thing. If I show, or I'm definitely going to show my account that I was using for that challenge that we were doing, that prime funded account. So I'll probably actually, if we want to switch over to my trades, we're going to see a lot of them. There's actually going to be way more trades than anyone would have hoped to see, only because, like I said, we were doing a trading challenge amongst the coaches. So it was one of those things where we were really enticed to do a lot of trades to try to see if we could dig ourselves into holes and then eventually try to get ourselves out of those holes. So yeah, back end, anytime you want to switch over to my screen, I can actually walk people through a couple of the trades here. Hang on. Let's see here. Yeah, I mean, I was kind of just in the NASDAQ the entire day. Again, trying to find levels that were appropriate for entering in long and short. I do believe that I had a couple of good trades here. So let's take a look, see. So again, this is the Project X platform for anyone that trades the future side of the Hola Prime. There's a lot of different things you can do on Project X, but one of the main things to help you kind of see where you are in terms of your trading is where is it? Show chart executions. All right. So this is going to paint onto the chart all the different trades. I'm sure it's going to be catastrophic.
My lord.
Oh my God. I mean, I don't even know. I don't even think that there was a single minute that I wasn't in a trade during our little challenge session. So again, oh my God, it's going to be kind of a jumbled mess, but we'll see if we can't figure out what the heck was going on here. And again, it's one of those things where I wish that it was a little bit better and they didn't do every single print. Like, can't you just tell me, like, I entered at this price right here on the chart? But
I agree.
But it is what it is. All right, I'll actually take these off and kind of just walk through and just trying to jog my own memory here. Let me see. I know that there was one where I was like ultra short. Oh, that was towards the end of the day here. So as you can see, short 15 lots, long 15 lots. So live on the stream, for anyone that wants to go back to Friday's futures takeoff session, we decided that I should definitely use the little reverse position button that's on the right side. Why did they think that was a good idea? I'm sure that they were trying to get my P&L to just totally blow up and be like, yes, Tony, yes. Just hit, if you think you're wrong, just hit reverse position on 15 contracts. It's okay. Book that $3,000 loss. Yes, it's okay. I think that they were trying to get me to do a little fall from grace here. And it worked, actually. I actually decided that we were just going to keep on hitting reverse position until we got a breakout one way or the other. So let me kind of just take off these little chart executions here so we can clean up the chart and kind of show you guys what I was looking at. So like I said, this was later in the day. We actually stopped trading at 3 p.m. So like right around here. So with me, I trade the 15-minute opening range. Definitely hard to see, but these little green lines are the standard deviation moves to the upside. The 15-minute opening range is this opening range high is this solid white line here. Opening range low is that solid white line there. 50% right in the middle is the dash line. Okay. A couple of different lines that we have on the chart. The blue one is the VWAP for the session. I'll just take that off because it didn't really matter. I wasn't a long, and that helped for confirmation. We'll walk through that in a second. And then I have the 21 MA and the 9 MA, but we'll just kind of take those off to help again with the chart. And then I got the 200 there just for a longer term support. Didn't really matter on Friday though. So this is what we were looking at. So again, so many things wrong with this chart. So many areas where I just would not want to take a trade, but because we were in the challenge, I was doing it. I was going for it. Getting short right before statistically significant levels, trying to front run it. I never do that. Okay, it's one of the worst. I was just saying to Coach Alex with his strategy, it's one of the worst things that you can do is, hey, we're approaching a level. Okay, I think there's going to be resistance there. Or I think we're going to blow through that level. So I'm going to get long preemptively right below this like solid green line. And then what do? We reject right off of it. It acts as resistance. And it's just like, it's a 50-50 thing, guys. When you're getting close to a statistically significant area, you just want to wait. You want to wait for many reasons. One of them being you want to make sure that it's actually statistically significant. Okay. You want to see the market or the instrument that you're trading actually respond off of that area or blow right through it. Okay. Indicating that, hey, like if we just blew through this area right here to the upside, I'd be like, hey, either we're going to get a little bit of reversal. That old resistance is now going to become new support. Could happen. And then maybe we're off to the races to the upside. Didn't happen until later, but like I jumped in short, made a couple of bucks. And then it was this area right here that I was 15 lots short, 15 lots long. And this solid, thick yellow line, that was the previous day's all-time high. Okay. So definitely statistically significant. All-time high in the NASDAQ from the previous day. You can see that it was kind of like jumping around it all throughout the morning / mid-afternoon session. It definitely provided support and resistance areas. So again, we were looking for a total breakdown and then obviously breaking through that previous day's all-time high in the NASDAQ. But then just below it, and you can barely see it, is another thin green line there, which is that first standard deviation move to the upside. So there was a lot of support right there. Net, I was short going into it. Shorted 4 more contracts right before it, right, to see if we were going to get a dump right through. We didn't. I reversed my position, and I think I made like $3,000. It's because this is the thing. I was up like 4K. I was making money in the short. I was up 4K. We got this nice little support bounce off of that area, and I was like, oh shit. So now I'm going to book like $1,000 loss. Reversed my position, made $3,000, won the competition. It was actually pretty cool. And this was going right into the final minutes. I mean, like I said, we ended at 3 p.m. Eastern time, so 1,500 hours. And it was for the win. It's kind of awesome, coming right down to the wire. So that was one of the trades again. And we had to preface every single trade I was doing here with, guys, if you're just tuning in, we're almost at the end of this futures coach challenge. Okay. Do not follow these trades. Please do not follow these trades. So literally we had to do it. We were reading off like this disclaimer, like every 5 minutes, because we had obviously fluctuating viewership. So we were just trying to make sure that no one was going to get caught off sides. But again, talk about tough trading. I mean, Thursday kind of looked like this on Thursday too, where you're looking for continuations of like breakdowns, and it's like just kind of arbitrary, moves up, moves down, weird trend lines, nothing really being respected until the morning session kind of took a break. We got that London close. Didn't really do much. Again, a lot of levels just like chopping around until we just found some sort of support. And again, pretty long wicks. These were those like Trump comments. There was like 2 or 3 times throughout the day where Trump just decided to talk, and we just had these volume spikes like right here. Unbelievable. Terrible if you had a position on and you were caught off sides. Even worse if you had a position on and then you were caught off sides and you got stopped out, right? Because then I think I was net short right here. We spiked all the way up. I didn't cover, and then like we ended up going down further, which was like turned out to be a really good trade, but terrible trade. Obviously, you don't pat yourself on the back for something like that. You just got lucky. Okay.
Yeah.
So again, and I'll say it again in this one, this was during the Futures Coach Challenge. Okay. We were all trading against each other. So like we were just putting on like insane risk for really minimal upside, honestly, only because like it was for majority of the session, it was between myself and this other coach, Coach Sam, who he's a scalper. He's a scalper through and through. So he's doing trades every minute almost. So he was constantly catching up to my P&L. He's like, yeah, I'm within like $80 of your P&L, or I'm beating you by $200. So then I'm like, all right, you know what? F it. I'm putting on another trade right now. I just pick a direction. So there was a lot of stuff like that. Other than that, some of the things that I do end up looking for is like the 15-minute opening range. Generally, if you have a breakout to one way and then a pass through, so a reversal, and you pass through the middle of the 15-minute opening range, it indicates that you're probably just going to end up going in that direction for the rest of the day. And this time it ended up being to the upside. So it kind of was true, definitely that day. Had a little yellow line, was literally pulling all the tricks out of the hat. I was like, this is a bull flag. I'm going to paint some sort of, resistance level. Once we get candle confirmation closing above that, we're going to get ultra long. And it worked out, I guess. So, it was one of those things where totally crazy, totally detrimental to your trading psyche, because you should not be trading like that. But again, for me, at least with this, I actually just hid the MAs. We had some MAs crossing the 9 and the 21. The 9 was leading. So the shorter MA was leading the longer MA higher. That was one of the things that we're always looking for when, you're either looking for a bull or a bear run. And that was just holding true. So we had 9 MA, 21 MA support, shorter one leading the longer one higher. So again, that was more technical confluence that I was getting to kind of just say, hey, pick a spot, we're getting long, and we're going to see how long we can ride it up to. Turns out we rid it up to that previous day's all-time high, which is a great trade. I don't even know if I stayed in for that long, just because I was looking for any reason to get out in profit on a day like on a day like that. So yeah, a lot of different trades for sure in that account. Kind of just looking again, we can go to the performance stats. So yeah, I guess I ended up, about $6,000 on that day, 5,900. That was the first day that I had ever traded that account. So again, I'm actually going to go through on the back side of this, and we'll see how much do we have to make in order to get a payout potentially on that account. Let me take a look real quick, guys. Go to my dashboard on that one-step prime funded. Yep, we have to make $15,000. Technically, it's $14,772 we have to make on this account before we can request a payout. So, can we do it, chat? I think I'll be updating people as we go on this account because it is quite something. Sorry for everyone in the chat. So we're just going through a couple of trades that we did on Friday. Again, we were doing a futures coach challenge on Friday between obviously the futures coaches. There was 4 of us. This was the account that I was using on that day. We had almost a $6,000 day, which was awesome. And again, we were just taking crazy amounts of risk. So for anyone that's looking to just do YOLO trades, I guess you should watch the futures takeoff session on Fridays when we're doing those challenges against each other. 53% win rate. That is terrible. It's not terrible. Okay. 53% is 53%, whatever. I mean, I guess there's a little bit of alpha, but still, for someone like me, I like to see at least 60%. And generally, I'm down towards 60% only because maybe I'll do a couple of trades that are just like kind of willy-nilly. Like, hey, this looks like a really good area. Let's see if we can't test to see if this ends up working out. So yeah, that was the account for that. Again, guys, last week I had 2 losing days, 2 red days. This is after coming off of like, I don't even know, like a 21-day win streak. And of course, it was literally that landmark Fed decision that was happening. So I probably just shouldn't even have traded that day. And actually, one of those days that turned out to be a red day, it actually started as a green day. And I was up $1,000. And I probably should have just booked that because that was a date. That was on a Tuesday. That was a day before the Federal Reserve announcement. So, again, it's one of those things where it's like in and around some sort of Federal Reserve meeting, especially if they're talking about cutting rates for the first time in over a year and a half, 2 years, whatever it is. Profit is profit. So if you can just be in the green, even if you're up $150, or at least I guess for Hola Prime, like you got to make at least $250 for that day to count towards you getting a payout. So if you're up $250, walk away, guy. Just walk away. All right. You did it. You did it better than I could have because honestly, like, let's go through it. I mean, one of these direct accounts, this is a direct account. I mean, I'll just show you. It's Hola Prime. We're the most transparent prop firm out there. So yeah. Oh, three days. God, terrible last week. So down $5,000 on this account on the week. But again, like I said, that September, August was a bang out month, started out hot, all green days. And then last week, just, you shouldn't even have traded, and again, like I said, that Tuesday down $2,700, that was actually up 1,000, so should have just left it there. But then, I got a couple other accounts too. So, I mean, it's just, you got to have multiple accounts, right? But you don't want to blow any of them, guys. You don't want to be blowing up your accounts. Okay. Small, incremental, consistent profits is what is going to get you to the next level. I mean, already, like I get like 1 payout a week and it's maxed out. If you can turn it into 2 or 3, then you're a rich man. Okay. So by any stretch of the imagination. Absolutely. So guys, like, honestly, like, take the profit and run. Like, the quicker that you can make money in the market and then get out, the better off you'll be, because we're not trying to trade 24/7. Okay. You're not an institution. You're not an algorithmic trader, hypothetically, you're just trying to extract some sort of profit from the market, put it into your account and go home for the day. It's one of those things where it's like, yeah, we're jumping onto the train tracks and it's a high-speed rail and you don't know when the train's coming. So are you going to be break dancing in and out, putting one foot on the track, putting your whole body on the track, put your neck on the track? get off the track, get on the track. No, you're going to try to get on the track, get your crap done, and then get off because the train's coming. You don't know
Yeah.
when. So
Yeah.
again, that analogy, it just totally holds true for like any instrument, any market that you're trading. And you really got to think about it sometimes. Okay. Because I know how daunting it can be to just be like, oh, it looks like the market's going up here. Oh, it looks like it's going down. And it's like, dude, it's not going
Hmm.
freaking anywhere. You're just seeing crap and you're just trying to put on a trade hoping that you're right. But then God forbid you are right. Because then and I know that you were just gambling. You just hit buy or sell and you were right. So what are you going to do next time? You're just going to gamble again and hit buy or sell. but you're not always going to be right. Okay, guys? So like that's the thing. Samuel trades, I
Yeah.
feel you. He says, I feel you. Yes. Yep. So
Hmm.
it is tough out there. Looks like Dito Wasa, he has a question for us. What assets are more predictable? Currencies, energies, or indices? Not talking about cryptocurrencies. They are totally unpredictable. Okay. I don't know. Alex, you want to try to shed some light on this one? What do you think? Forex, energy markets, or indices? Which ones are more predictable?
It's
Great
so
question.
funny because like that. Yeah, it is a great question, but it's I'll start off with this by saying this: all the markets are totally unpredictable. I think there's just levels of unpredictability, and you can get used to them and like try and figure them out. If the market was truly predictable, I wouldn't be here right now. You'd see, I'm on a
Yes.
beach, I've retired somewhere with my 100 Lamborghinis, that sort of deal.
Oh yeah. Hell
So
yes.
although, yeah, exactly. And so, although I totally
Yeah.
understand the question that's being asked, what are more, what is it? What are more predictable? Always want to put out there that the markets still are not predictable. I think it's really just down to what you like at the end of the day. Like, look at Tony, for example, and what he's just shown us there with his returns. Would you say that's an unpredictable market? Do you say, or would you say that he knows it, he's understood it, he's been around it for
Mhm.
quite some time, and he's got a strategy that,
Mhm.
lowers that, maybe not the unpredictable nature of it, but it's the strategy itself. All markets are just crazy, but if you put a strategy in there, you can depend on that to pull you out. Yes, you can definitely have like discretionary trades, and you can focus on full price action, etc. To which I do love the futures markets. I do love S&P 500. I do love the Nasdaq. I do like Great British Pound, USD. Those sorts of things. Like there are ones that I
Mhm.
like, but I guess to a crypto trader, they'd come over here and be like, I've got no idea what these markets are doing. They're completely unpredictable to me. They're so foreign. So yeah, it's just that. My answer is, I guess everything's unpredictable. Focus on building a
Mhm.
strategy, and if you can apply it to any market, use that. Go for that. That's what I would be saying. So I've gone a completely different way there, probably to what you thought I was going to answer. But I don't know. What do you think about that, Tony? What's your answer?
Well, I'm actually kind of biased, like totally biased. I think that there is a great deal of, I don't know. Well, yeah, it's a good question. You were right. Everything is very unpredictable. That is a good answer. But I will say that I think that they're only because and it's different because like I got 10 years I've been doing this. Started in
Mm,
commodities. So I started in natural gas trading, okay,
mm,
futures and physical. So I think that the natural gas market is literally one of the most unpredictable markets in like the whole world. Because obviously, of course, so many things affect it. Yes, but there's just like weird stuff that happens like in the energy futures markets, like even crude oil. And like I'll get to that in a second. But I mean, we had when I was trading nat gas, like we had guys that were like they don't trade time frames at all because there'll just be huge bouts of like crazy liquidity and you can't even like sift through whether it's someone establishing a position or like some sort of market direction underlying, underneath the surface, like starting to like unfold. Like you really can't like discern what is what in the natural gas market. They do a lot of the guys do it on ticks. So they'll do like 10 ticks per bar, 100 ticks, 1,000 ticks a bar, whatever it is, because it kind of gives you a more smooth picture about like what the hell is actually going on. So again, like I think like nat gas is like totally unpredictable. Some people do really well, but I think that the people that do really well trading natural gas do it on like really, really high time frames. And like they're waiting for like really large cycles to like play out. Like I'm talking about like holding positions for like 2 weeks, maybe that's like the minimum. Because I do know guys that like hold for like 2 months. But again, they're trading on like institutional desks and they have like hedging programs going on. So moving on to crude oil, and I know, feel free to jump in, Alex. I know that you were saying that like you have traded crude in the past, or it's one of those like
Yeah.
redheaded stepchild. Like you like to look at it, you
Yeah.
occasionally like to trade it. Like it doesn't always respect the shit that it should respect, and like that's what I honestly have
Yes.
found in the last year and a half, 2 years, probably a year and a half for sure of trading crude. Traded a lot of crude oil during COVID, and it was great. It was awesome. So predictable, really nice overnight moves, where you could just totally like trail with stops and like you literally get out at like almost the top or almost the bottom. So really, really nice moves in crude oil during COVID. But I think that was also the biggest part was the massive amounts of liquidity that were traded during COVID. Obviously during COVID, U.S. oil traded negative briefly for like a day or two.
Yep.
I think it was like negative $30 a barrel. So like there was a lot of eyes on the crude oil market. Obviously a lot of liquidity going through the pipe in the crude oil market. So yeah, so that definitely helped with those nice smooth moves. And then the Russia-Ukraine war started. So again, into liquidity in the crude oil markets, from people like JP Morgan, ExxonMobil, all those physical desks, and then who knows, people across the world. I don't know if central banks get involved with the crude oil markets. I have no idea. But just a lot of liquidity. So again, like really good trading environments for crude during COVID. And then like the last 2 years to like year and a half, the last year and a half for sure, it's just like chopping around, like not respecting levels, finding arbitrary areas to just like bounce off of when like the overall outlook for the week, for the month, for the quarter is like negative, but you'll have like crude oil just like up $1.50 over the last 2 weeks. It's like, what is going on? Like, there's no geopolitical risk happening. Like, why is this happening? Like, I don't know if it's short squeezing or whatever. But yeah, just a lot of that started to happen in like the crude oil market. So I just quit it. And probably for the best. Like, started taking on some losses, but also just totally sized down the risk. And like the risk to reward just like wasn't there at all. Like, I'd be trading crude oil, get in, and it was hard. It was fucking, sorry. It was hard to make $1,000 in crude oil in like one day because like the moves, it just wasn't there. It just wasn't happening. And like, I like to trade basically a system-based strategy. And I checked 2 boxes as to why I should get long, couldn't check the third, and the market would just like take off without me. And it's like, okay, great. So next time it comes around, check 2 boxes, can't really check the third. I get long and the market takes a crap and I get stopped out. And it's like, okay, see, this is what this is what I'm talking about. Like, it's just way too hard to try to like figure out what the heck's actually going on. So I just quit. And then went back to Nasdaq, the indices, there's always a ton of liquidity. They're always oscillating, always trying to find trends, stuff like that. They do chop for sure, but the chop tends to be like predictable. I mean, at least with my strategy, the 15-minute opening range, I found that days where the range is like 50 points, which is small, okay, that 15-minute opening range is like 50 points wide, it's going to chop like almost 100%. Like it's just going to chop, which helps me identify like, hey, that first, you think there's a breakout, you think it's a breakout, candle closes above the 15-minute opening range high, don't do it. I don't do it. And then the next candle is a reversal. It's like, great. I just saved myself $500. Like, awesome.
Yeah.
It's that type of stuff, guys, that helps with a strategy. Okay. And obviously having a strategy helps with P&L. Okay. It's not just about, oh man, like I just saw some lines on Coach Alex's chart and it looks like every time it breaks above there, like you just get long and I make money. And it's like, well, yeah, but like that's your confirmation. But you also have to know about, what do I do? How do I know when it's time to get out? When this trade is moving against me and it's not going to be playing out in my favor? When do I need to stop myself? You know, whether it's a risk reward type thing or whether it's like you actually have like, hey, we're breaking back down below that anchored VWAP. It's not looking like it's going to be a breakout. Whatever it is, you still need to have some sort of systematic approach about why you're getting in, but also why and when to get out. So I think that's, again, it's just something that's like not talked about as much amongst traders, especially new traders. They're just always looking at when can I time the market to get in and then be in the money. Yeah. But then they have no idea what the hell to do when the thing goes against them. And it's like, do I get it out now or do I stay in? Do I double down? It's like, you got to figure it out, guy. You really just got to have a plan. So to get back to the question, not to go off on tangents, this is an awesome question because it does allow for so much diverse conversation. So thank you, Dito Wasa, for the question. But I do think that energies are really tough right now, only because like there's a lot of geopolitical risk headlines. And then when there's no headlines, it's just a very, very tough trading environment. So it's hard to have it just start going to the upside or have it start breaking down for no apparent reason. So it's hard. Currencies, Coach Alex, that's his thing. Indices, I think that is a great place to start. Picking one index is the only thing that I would recommend. Why? Because each of them trade off of different factors that influence them. And also just learning one thing is easier than learning 5 things. Okay, so if you're just starting out in futures or if you're just starting out in trading, I do think that just picking one index and then just learning the crap out of it is the best place to start. And maybe it might just be that's what you trade for the rest of your career, for the rest of your trading career or the trading journey. You find out that you can trade ES or the Dow really well, and if it's not broke, don't fix it. If you're making a lot of money, then screw it, just leave it. Leave it as is. Like just keep on making money and sucking money out of the market, putting it into your pocket. Yep. So awesome. Thanks for the question. And let's move on to another. Samuel Trades. He says, I think I'll ask, what market sees the most price manipulation and volatility? Price manipulation. That is a great one. Let's see. Hang on. I think he's following up. Trading one CFD for a lifetime versus trading up to 10. What's your take and professional recommendation? Okay, I'll take that one first. Alex, you can think about the question of the market that has the most manipulation or volatility.
I've got it. All
so
good.
So I think I was kind of touching upon that before. Like, if you can make money at doing one thing, that's how you really make a lot of money. Okay, because if you have a high win rate and you also have that I guess, longevity in your trades where it's like, hey, you don't have to do 10 trades to make $1,000. You can do one trade to make $1,000 and you can have super high confidence in that one trade. Well, then eventually, once you get enough money, you get enough buffer, you get enough comfort, you can then scale that up. And now it's like, hey, you can do one trade and make $5,000 or one trade and make $10,000, with leverage, of course. So I think that's one of the most important things. I always say it on the stream, like, I'll sit for as long as it takes to just find one awesome trade that you can be like, dude, I'm taking 5 lots here and I'm going to make, $500 a lot. It's $2,500 and it's only going to take 10 minutes. Like those are the best trades. And again, like those really great trades, I've never felt, at least not recently, I've never felt when I identify those really, really good trades that this is it, or I'm late to the trade. When you have confidence in the trade, you're like, yeah, dude, this market's going up. It's going up. You have all these different confluences. Like you have confidence in the trade that like, dude, I'll take 10 contracts right now. This thing's going up. And then it just goes up, or you get long and it goes up. Those have always historically been my best trades. I've really never found like, okay, it's getting close to that breakout level to the upside. Like I'm going to get preemptively long. I haven't gotten that candle confirmation saying that it is going to break above this level yet, but I'm just going to get long. Those have literally that's always how a losing trade starts for me. Like I get preemptively long, didn't get that confirmation. I get long and it just immediately reverses and it's like, shit. Okay, well, is it going to reverse again on the next candle? So then you stay in the thing for like 4 minutes and it's just down, down, down. And it's like, okay, this is a $500 loss now. You're getting stopped out. Like it's done. Great. That was an awesome trade, dude. So like, and then, it plays with your psyche, right? It makes you feel like an idiot. You lose confidence in yourself. Now you begin to trade scared because you're already in the red on the day. Now you have to make up that loss and then some to make profit. So like it's just not a good thing. So waiting for the confidence, trading one thing, knowing when that one thing is going to make a move. Those are literally the best trades. And sometimes you just got to wait. One other thing that I would add is just like missing out on a trade is okay. It's okay. Okay. Because number one, even if you miss an entry, like here, I'll even show it on a chart here. So here's a great example. We break through the 15-minute opening range. Okay. We get support at that first standard deviation below the opening range, but also this little dash blue line, that's the previous day's close. So usually you always have support or resistance at the previous day's close, right? So we have two statistically significant areas, right? You don't preemptively get long here, right? Because you don't know. I mean, you just came all the way down. Who's to say it doesn't just keep on going? And then you have a wick right here where it's like, hey, it did keep on going down. So like if you got long preemptively, maybe you would have just like panicked and panic sold and booked the loss, If you wait, it turns out, hey, that statistically significant area was significant. It acted as support. You wait. Then boom, you get your MA start to cross. It's bullish. Get a little bit of a pullback. For anyone that likes to trade bull flags, boom, you got a bull flag. Wait for the push through and continuation above. And boom, like look at, that's an awesome trade. Like at no point were you in drawdown, whether you got long here, whether you got long here, like it was just all upside again. Like, it's like, dude, you could have 10 contracts on that. You would have made 50 points in that trade. That's like $5,000. Like awesome. So it's just like, you want to wait for those. You really want to wait for those. And then like even this type of crap, like it's like, dude, just like up, down. It's like don't even bother getting long or short, because then it's like this. Say like, hey, like say you knew somehow this was going to be like resistance and like you got short. It's like, okay, well, at what point do you get out? Because these bars, the range is pretty big. It's at least 10 points up or down. So pick your poison. Like you're either going to like make money or you're just going to like kind of break even. And like, what's the risk reward on that trade? Freaking nothing, because at any point it could just rip to the upside because you're just in no man's land and the market hasn't really picked a direction yet. So again, it pays to wait. Okay. And like I said, even if you waited on this trade that long, at any point, you would have been in the money. Okay. And you would have had ultra confidence that it was going your way. So you're not missing out on anything. Okay. So yeah. So always remember that. So moving on to some of the other questions. Awesome questions, guys. We love them. Keep them coming in. Asked about which market sees the most price manipulation and or volatility.
Cool. So I believe I was taking this one, so that's fine. I'll take you back on a little journey first. This is when I first started trading. Oh, actually, how long ago was it? Just after this, actually, because I've been in it for basically the same amount of time as Tony, just about 10 years, or Tony's 10 years plus. And I remember the FX scandal in the 2010s. So there was a bunch of major banks. You should go and have a look at it because it's actually quite an interesting read. A bunch of major banks, JP Morgan, Citibanks, Barclays Banks, Royal Bank of Scotland was even involved in this. And they were fined billions of dollars, like billions and billions and billions of dollars for colluding to manipulate market currency benchmarks like WM/Reuters, right? So they've been doing that for forever. Like, even though the FX market is the largest market in the world, well, I should say that, well, one of the least regulated globally, it definitely has a lot of manipulation. I mean, so there's been times where I've just been in the markets on a random Tuesday, like tomorrow, for example, and I'll be in. I remember this happening 2 years ago, actually, and a bank got fined for it. And luckily, I wasn't in the trade, but I was watching AUD JPY, and all of a sudden, it's just ticking along, just doing its normal thing, and then it jumped 20 pips for absolutely no reason. It just went straight up, and within the space of 20 seconds, went up 20 pips, 25 pips, and then went all the way down 25 pips, and then came straight back up to where it was supposed to be, and then just kept on going along. And I was watching it going, what was that? What just happened? And I was like checking, I was like, is there news? No, it's a Tuesday, there's no news coming out. Okay, when was the last news? It was like last week, Thursday. When's the next news for either of these pairs? It was like in like 3 days. I was like, it's Asia session, there's no USD news coming out. Because that was the only thing that I can think of. And then sure enough, a day or two later, again, I can't remember who it was. I think it was Citibank again and someone else. They'd been fined for this market manipulation for just on a random particular day, and they just gone in, made a ton of money. But the thing is, they get fined $1 billion, but they've got so much money in those markets when they do those sorts of things that I'd say it's more than a slap on the wrist, but it's nothing that they won't recover from. They would have made so much money from that move. Like, I'm sure they've thought about it and gone, okay, well, if we get fined, it's this much. But they've probably done it so many times and not got caught. It just happened on this one that they got extremely greedy, and there were a couple of, I don't know, tens of thousands, hundreds of thousands of people watching the markets at that time. So I would definitely say that the FX markets are manipulated a couple of times a month. Easy. I've seen it happen on oil as well. The OPEC cartel itself is a form of coordinated price control. And you should go and have a look at that and read up about that. And there's been individual scandals like the manipulation of Brent crude oil benchmarked by traders. That's been documented. Like, FX and oil, I would say, are some of the bigger, but I would say I'm also biased in terms of that. Those are the markets that I have been around for the longest period of time. And of course, we're not counting crypto in this conversation. If we were to talk about crypto, then it's king, it's number one, it's as high as you can possibly go. No one's taking that crown. But underneath that,
Mm-hmm.
I have seen oil, I have seen FX. It has been the thing. I've heard about news about agricultural futures as well, but I'm not 100% sure on that. That's more in the background. But yeah, if you're looking for manipulation, hang around the FX markets for a while, even 6 months, and you will see manipulation. It will happen. It will just
Mm-hmm.
occur again on a random Tuesday, on a random pair, for absolutely no reason. So that is my long-winded answer. I don't know if you've got any stories like that, Tony, yourself, but I've definitely got a few more that have happened within the FX markets, that's for sure.
Sure. Yeah. Yeah. I mean, it is. I really think I think I've talked about this a couple of times on the quiet markets, but I remember seeing a chart, and someone did a study. I think it was like a 5-year study, and I think it was published back in 2019. I don't know who it was, and I gotta find it because it's really good. It's a really good read, and I keep on bringing it up, so I should have something to like base my claim off of. But they're like, it was the exact question, like, what are the most manipulated markets globally? And I think the first one that they they didn't look through Forex. They just looked through like, futures markets and more specifically commodity futures. And they said it's gold, palladium, crude oil, and then there were some other weird markets. And again, like it went into like, yeah, like collusion amongst probably central banks,
Mm,
other, large institutions that operate in these markets daily. Um, and I actually kind of know that because I actually consulted for a metals and mining company. This was during COVID, and I talked to a guy that traded gold, and he was like, "Yeah, dude." He's like, "We get on with London, and this is out here in Boston." He's like, "We get on with London every single morning." He's like, "I'm up." He's like 3 o'clock in the morning. Um, we get on. We understand. They kind of just walk us through what's happening, what's going to happen, what they think is going to happen, right? So they're just like walking
mm,
everybody through, like, this is what we're looking for. This is what we're looking at. If this happens, do this. If that happens, do that. So, like, collusion, sure. I mean, at least I would call it moderate market manipulation when you can get everybody that's a participant, or at least a large participant, on your side and doing the same thing that you're doing, for sure. And I guess it's really
mm.
easy, like, for them to do it in the gold markets. I mean, occasionally I'll be trading gold, and I know that Tiger and Michael, all them, he looks at the precious metals, and like, yeah, it's like there are very easy oscillating moves to just like be had. And I'm sure, like, if you look during the high volume times, like, you can just totally like kind of jump on the move. I actually do the opening range strategy has been used on gold. So I don't know if that's something that you should look at, Alex, eventually. And I think that they
Honestly,
do use the London session, just, on your own time, or, I'm not sure if you trade gold XAU
mhm.
USD.
Yes.
But yeah, for us, it's slash GC. So it is one of those things that kind of just breaks up or down, and then I think it's just like kind of gone for the rest of the day. So again, not a terrible market to be operating in, for sure, because
Mm,
you really don't have to like look at much, where it's just like you're just exactly what Tiger tries to do, right? You're just trying to follow what the institutions are doing and piggyback
mhm.
on them moving the market in one direction. You're essentially just like a leech on the back of like a shark or something, right? Like, you're just
Yeah.
along for the ride.
Yep.
Yep. So I mean, yeah. So I hope that answers your question. Let's see.
Another one.
Another question. Yeah, go ahead. You go
Yeah.
ahead.
Cool. All good. So, from the overall margin on any account, what percentile margin would you recommend the trader should use in order to not blow up their account so soon? I don't know. I think you'd probably be better positioned to answer that question there, Tony.
Sure. Sure. Yeah. No, it's a really good question. And it's one that a lot of people, if you're new to the proprietary trading space, or if you're trading live cash, it's a really good question. Couple of things. So if you're on the prop side, obviously at Hola Prime, I mean, we have max daily drawdown and then you have total drawdown, right? So, one is smaller than the other. The max daily drawdown is going to be tighter to your account balance than the the total drawdown. So you're going to want to obviously set a couple of risk parameters. Depending on your strategy, depending on how many times you trade in a day. Someone like me, I do like 5 trades in a day. Hopefully I'm hitting my profit target by then. And after that, I need to be extremely selective because, again, like kind of as my strategy goes, as the day goes on, it kind of gets harder and harder to find like a breakout. Okay.
Mm.
And if it's not happening by like midday our time and we've been at it like for 3 hours, it's just probably not going to happen at that point. Or you're going to get tied up in some sort of like market on close break to the downside or to the upside, and you just don't want that. There's too much risk, too much volatility. So in terms of margin on any account, depends on the account size. Okay, so if you're trading 150K account, which is what I usually recommend people to go with, that is actually the maximum account size for a direct account at Hola Prime. They have 250K and maybe a 300K account, but those are for like the one-step challenge accounts. And if you want to go through the challenge, then feel free. But at least for me, I go with 150K direct. Maximum drawdown, total drawdown is $4,500. And I think daily drawdown is probably like 3,000, something like that. Or maybe 2,500, maybe it's tighter. So what I try to do is like, you want to risk like less than 1% of the account value. Okay. When you're trading prop. Why? Because it allows you to be wrong like 3 to 5 times in a row. Okay, before things tend to get like a little bit uncomfortable for you on the day. Okay, so you want to at least, especially if you're new, find the maximum amount of opportunities in a given day, right? So you don't want to just be like, hey, I found this one opportunity. I think I'm going to get long. I think I'm going to get short. And then you pick up 5 contracts and you can't even weather the volatility that happens in the next 2 minutes. The market's not doing anything. It's just oscillating, right? Maybe to the upside, but because you're long or short 5 contracts, it's whatever it is times 5, right? So maybe you get a little uncomfortable, right? Maybe you start to tighten your stop loss, like, oh, I'm only willing to lose $500 on this trade. Well, that means that you're only willing to lose $100 per contract because you now have 5 contracts. So you see, like, this is where things start to get like really hot and heavy and uncomfortable early on in the day on your first trade. And it's like, guy, just don't let that be you. Okay. Don't do that. Okay. Take 1 contract, maybe 2 contracts. You got a 150K account. You can lose on this trade if it's not going your way. You always want to make sure that you know why you lost on that trade. Okay. And what to look out for before you either re-enter the same trade or you look for another. So I think obviously they just say sizing down, but what does that actually mean? It means if you're trading a 150K account, do 1 or 2 contracts maximum, okay, per trade, because then you can have losing trades. You can have more losing trades, okay? And it just gives you more opportunity to, get lucky. Also, you should be trading a strategy, but also maybe with a little bit of luck, you have like a big trade. So those 2 contracts, you make $2,000, maybe. So that's really just what you're looking for. Awesome question there, Samuel Trades. I know it's late where you're tuning in from, so I appreciate you being here. Anything to add on that one, Coach Alex?
I mean, you always got to be thinking as well about, and I'll probably just be saying the same things here, but in terms of like what I was taught when I started in terms of percentile margin guidelines, there's really a couple of options, right? You can be moderate, like active but risk aware, or aggressive or conservative. I would put to you that conservative is the only way that you should be going. I think there's a lot of information out there in the markets that say, oh, you can use 20% of your account. You can use 5% or 10% or whatever it is. Because if you lose, it's okay. Then you just use 10% of your new account balance and so on and so forth. I wouldn't be saying that. It's not something. If you're looking at the fastest way, right, to blow up your account so soon, it's doing exactly that. It's doing exactly that, and just going, oh, it's okay. I'll lose 10%, then I'll just use 10% of my next balance, and so on and so forth. Your balance is going to shoot down. You're going to be gone. It's going to be see you later. It's going to be good night. So much like we were talking about, what Tony was talking about there, use like one contract, use two, use the lower amounts. It's just the same with the amount of you're risking. If you're going to Forex, use a lot. Use less. Especially depending on your stop loss size, because it is a little bit different for us over here in the Forex markets. And just make sure you have that 1% risk that you've got in. Again, as I say all the time, and I feel like I say this several times to loads of different individuals in trading, and I must have said it a million times during my coaching days, but this is a long-term game. This is, if you want to be here for a couple of weeks, then what we should do is just, as soon as Tony's in one of those, one of those head-to-heads, follow his trades. Obviously, don't do that. That is a joke. But but like that's effectively what you should do, right? Because it's going to lead you one way. You're either going to have a ton of money or you're going to blow your account, and that's it. That's obviously not what you're asking.
Yes.
The answer is just go really slow over a long period of time. I mean, you can even see with these consistency rules, and some of the accounts that I'm involved with have consistency rules as well, where it's like one win can't be over 30% of your total earnings. And I think that's a good thing, because it does stop gambling. And now you see what happens. Now you have to make 15 grand. That's what Tony's up. So he has to be good for a long period of time. And a lot of these prop firms are waking up to that and have consistency rules. I know Hola Prime does, and it's good. So that's what you want to be doing, keeping that risk low, because you're in here for a long period of time. I mean, yes, it's mentally draining, but I've been in here for 10 years, just about, and I could be in here for another 10 very easily. I love this job. It's fantastic. And it took me a long-ass time to get where I am. Oh, my God. Just get so many losses, so many stupid mistakes, so much learning. But now that I'm here, no one can take that away from me, and I still do the same thing. As Tony has mentioned before, now that my account size is bigger, I can actually risk less, and I can still make the same amount, if not more, than I was doing 3 or 4 years ago, and I'm risking less because I was smart about it, I guess, and took my time to build up my accounts. And now it's like, oh, okay, well, what I was risking 2 years ago, for like what to equate what I get now is like 2 or 3% from 2 years ago. Now it's 0.75% risk for me, and I'm sitting here going, oh, awesome. So again, just go slow, risk small amounts, and when you eventually get to it, spend a year, spend 2 years, 3 years building your accounts up. That is the way to go about it, in a very long-winded way. That is what I would be doing, and that's how I answer the question.
Yep. I know, it's awesome. That's awesome. Just for me to add on top of that, even, it's one of those things where I mean, I've experienced it 100%. Like, you do trade different when you're in the money, like 100%. Like, and you do trade different. I mean, even me, when you're in the hole, like. Like it's just you trade differently, right? Like maybe you do a little bit more. Like sometimes, you put on a trade, it starts not working out immediately. You trade scared, you get out, you booked a loss, but it ends up playing out if you had just stayed in for a little bit longer. And it's like, why did you get out of that trade? Well, I was scared that it was going to turn into a loss. And it's like, well, you didn't even let it turn into a profit. So, like again, like trading from I forget what they call it. They say like trading high on the horse, something like that. Like some sort of boomer old person quote. I don't know. It's a lot easier for sure. When you have the buffer, when you have the money underneath your belt, it just makes everything a lot easier. And you also tend to relax. Why? Because you're like, I don't need to take that next trade. I don't need that. I'm already making money. I'm up $1,000. I'm up $500. I'm up $1,500 today. Like I could just be done. And I would suggest that you do just stop trading if you're up $1,500 for the day. Like, that's awesome. That's amazing. Like you've made like 4 times the average salary in the United States in one day. Like it's freaking awesome.
Yeah.
Come back again tomorrow and try to do it again. So yeah, I mean, you really are just looking for 1 or 2 good trades in a day that you can have ultra confidence behind. You can size them up if you wish, like if your account size and your risk parameters allow it. But again, you don't just want to jump into a trade and then just immediately start to have to play defense on it. And even more so, right? Like when I was talking about that NQ trade, like when some of these markets really start moving and grooving, like they really start moving and grooving. So like, don't worry about being late. Okay. The only thing that you need to worry about is getting chopped up or like the market reversing on you because you thought it was going up. Like, hey, I mean, even so, look at this. Like this is 15-minute opening range breakout strategy. I'm sure, we broke through the high, the 15-minute opening range. I mean, there's multiple levels. I'm sure that when price was trading up here, right up here in that little wick right here, people were getting long. And then just like in a matter of 5 minutes, you're down almost 40 points. Like you got stopped out, obviously. I don't even care what your risk reward ratio is. Like you got stopped out. That's a loss. Boom. Why? All because you just preemptively got long thinking that, hey, I'm going to get really long. When it's like, something right here, like you had like multiple price points to get long. If you wanted to even wait for things to tighten up and wait for that candle to close, like you probably would have gotten like some sort of small profit, right? Because this was another statistically significant area. I would have expected some sort of resistance around here. Plus, like I said, that gold line was at previous day's all-time high. So I for sure would have set my take profit like right below that line. I'm not dicking around, saying, yeah, we're going to blow right through all-time highs. I'm not trying to find out, if we're going to or not. It's like, great. Cause if we are going to blow through all-time highs, then we're going to keep on going. So like, just make a little money, get out and sit back and watch, and then again, reverse. Like you would not want to be in that candle. That's a freaking stop loss waiting to happen. And again, right here, right? Like as we break out of that 15-minute opening range, we're breaking through that all-time high previous day, the gold line, and then this little thin green line, which is the first standard deviation move above. I'm sure people are getting long, probably massively long, because like for 5 minutes we were trading in this area, but we had no candles close above, either of those resistance areas. So why would you get long? And then you freaking learned why you don't get long on something like that red candle right after. Freaking horrible. So again, like you just gotta wait for your shot. You just gotta wait for your chance and just play it from profit. Don't preemptively try to jump into something and just like trade from the hole, because like I said, even for coaches like us, like, yeah, it's true. I trade differently when my first 2 trades are like losers, because then I start thinking, ah, shit, like, am I doing something wrong? Is this day just going to chop around? That's not going to be good for me, Tony. Your strategy doesn't really do good in chop. You're not a scalper. So,
Yeah.
so again, then you got this psychological problem happening in your head, and it's just more things piling on against you. So, yeah,
Absolutely.
awesome.
And I think one of the big things to add on to that as well is, and it took me ages to learn this, even though it's so simple. There's going to be a trade tomorrow. There might even be a trade in 5 minutes or 10 minutes after that, and there'll be if there's not one tomorrow, there's a day after. So it's just like, okay, if you really, and it's great to have 1 to 2 really good trades. Like I'm 100% behind that. I'm 100% behind that. But also have in your head as well this the whole time, because that will help you get those 1 or 2 good trades. But sit there and go, okay, if it's a choppy day, like we were talking about before, with a lot of chop, and you're just sitting there, don't think, oh, I'm going to put one trade in there. Just go there. There'll be a market tomorrow. Always know your market conditions, what you should hop into. I mean, what Tony said there is actually extremely underrated. He actually knows the market conditions you should hop into. Like, you should know if it works in a trending environment, consolidating or ranging. Like, that should be number one. I mean, we both said that at different points in here. No, if you don't know your conditions that your market, well, your strategy works in, find out. But as soon as you do, and those conditions aren't right, just go, yep, come back tomorrow. Come back tomorrow, have a fresh day, whatever it is. News is coming out, doesn't work well in news conditions, whatever it is. Just sit there and go, I am going to be able to trade tomorrow. And if I'm not able to trade tomorrow, it's the day after. And that is so rare if you get, even for some swing traders, 3-4 days in a row with not hopping. I say some. I know some people obviously work on the monthly, but I know some swing traders where that would be quite ridiculous for them to go more than 3 days without a trade. So if you're a day trader or you're an intraday trader, chill out. You can do it. You can make it a day without having a trade. I assure you, it is humanly possible. So, yeah,
Of course.
always
Absolutely.
remember that. The trade around the corner.
Yeah. Again, I mean, it is one of those things where I really think it's like you said, underrated. Understanding, what market environment was most suited for your strategy is very, very important. Knowing when to get in, knowing when to get out, knowing what to do when you're taking on a loss and why, right? These are all the things that you need to wait for. I mean, I could go through this entire chart and just like tell you, at least for the 15-minute opening range, like again, like right here, I'm sure, like, we find some sort of weird arbitrary level. We start to sell off a little, kind of breaking through that second standard deviation. People are probably piling up short, and then straight up. Again, we're getting price action above the third standard deviation. People getting long, right back down. Like, you got to wait for the candle confirmation, whatever you want to call it. You just got to wait. It pays to wait in trading. Why? Because you're going to get a good trade. When it really presents itself, you can scale it up. You can make as much money as you possibly can, right? Hopefully it doesn't become a detriment like it did to me. But again, we'll see what happens. We'll see what happens for sure. Hola Prime is great because, they don't have that like intraday trailing drawdown like some of these prop firms tend to have, where it's like, it's chasing your highest balance. So like when you're making $1,500, it's like, okay, like now you can only lose, $3,000 out of your $4,500 max drawdown. Like it's all end of day type stuff. Like, Hola Prime wants you guys to succeed in trading. And then of course, you back it up with the Hola Prime TV that we have every single day. We have coaches that are out here. We're trading futures, we're trading Forex, we're trading the cryptocurrencies. We can look at anything that you guys want. And you can also book us for one-on-one sessions, which is awesome. And I think it's something that, again, all firms tend to offer, or at least they offer like some sort of paid version to people that you don't even know, like, because you've never seen them before, or you've never seen their trading styles. Like, maybe you just like read about them. So definitely take advantage of that for sure. I have a couple of you guys that are meeting with me this week. So that's awesome. So we'll be sure to connect again. And I think we have like 1 minute left. So
Yeah,
anything you'd like
literally.
to add? Anything that you should think we should be looking out for, in the upcoming week, Coach Alex?
As we said last week, a little bit as a joke, please, guys, be aware of the news when it's coming out.
Mm-hmm.
Just put it down. It's such an easy thing to forget, especially if we're not particularly talking anything about, in these quiet markets. We've been having really good conversations, but I always say, check your news. Check your news every day
Mm-hmm.
when you're hopping in. Write
Mm-hmm.
it down at the start of the week, whatever it is. I've seen too many traders since I've even come on Ola Prime go, oh, I forgot about this news. I was taken out of this trade and I lost that trade. And it's just remember, check your news, whatever you're doing, because
Yep.
you don't want to be involved really at all around news. Just leave it alone. So
Yeah.
that's the only thing that I would add, as I did last time. Check the news, and again, reiterating what we said before: know your market conditions, know that you're going to hop into another trade. Trade safely with a small amount of risk. All these things, every single thing that we said, if you take that on board, I promise you, you will start to see great results. And that is it. I
Yes,
think
sir.
that brings us
Yes,
to
sir.
the end.
Yes. Right on the dot, right on the nose. Perfect timing. Well, listen, thanks, guys. It's been a great session. And again, Coach Alex, hope we get on another session together. It's always flies by, literally.
It does. It does. I love it.
Awesome. Well, thanks, guys. So tune in again. We're gonna have Forex Fire a little bit later, and then we'll have the futures coaches on later in the day tomorrow. So awesome. Thanks, guys. Appreciate it.
Perfect. See you guys.
Hola Prime. Trade with transparency.